More signs of increased corporate activity in the city with another listing on the London Stock Exchange. It's a SPAC, or Special Purpose Acquisition Company, called Ashington Innovation, and I'm delighted to be joined by the non-executive director, Chris Disspain. So, Chris, I'm used to speaking to executives from AIM-listed companies, but here you are, you've listed on the main board, which smacks of confidence to me. So how much did you raise?
We've raised a little over 800,000. We think that given the areas that we're looking at as possible acquisition targets, the depth of capital available on the LSE it means that's where we should list rather than on the smaller markets.
Okay, so how are you going to spend the money? So I don't know which sector you're involved in or want to be involved in.
Well, as you said, Ashington is a special purpose acquisition company, and the target areas that we're looking at are FinTech and the deep tech sectors. For FinTech, the UK is probably the most attractive destination in Europe. I think there's been about £12.5 billion worth of investment in FinTech in last year. And there are 1,600 or so FinTech firms in the UK, and that's expected to double by 2030. We also have, in the UK, a favourable regulatory framework for FinTechs, and which is supportive of their development. As well as FinTech, we're looking at deep tech, which probably needs a little bit more explanation, because I suspect that deep tech probably means different things to different people. For us, it's a sector which we think is about leveraging mature and emerging technologies and to solve problems. And we define it as not necessarily focused on end user services, but things like artificial intelligence and machine learning, robotics, uses for the blockchain, advanced material science, photonics, biotech, and quantum computing. And so all of those areas fit into the deep tech, and then FinTech is FinTech. And we think that the LSE is the best place for us to be listed, to give us the best possible chance of attracting companies in that area and raising the money in order to acquire them.
So you talk about the favourable regulatory framework for FinTech. What about the regulatory framework for special purpose acquisition companies? Because there have been some recent changes where SPACs are concerned.
Yes. We are listing under the old rules, which means that we were required to raise a minimum of £700,000. And I think whether we are the last or one of the last listing under the old rules, I don't know, but we're listing under those old rules. And that means that rather than raising a large lump of money and then going out to find a target, which is in simple terms how I would describe the new rules, we are able to raise enough money to fund our search and then raise the money to acquire the target based on the attractiveness of the target.
So FinTech, deep tech, what experience does the board have either in this sector or running a company, listed or otherwise?
Well, we've got a very experienced management team, amongst whom are Peter Pressland, who's our chairman. Peter is an accountant, very experienced accountant, and he's got almost 50 years of business experience across senior management and C-suite positions, with significant experience in mergers and acquisitions, including on the LSE and private equity sales and so on. Jason Smart has also significant IPO experience, been involved in the creation of several high-profile IPOs. He has a strong record of bringing companies to the market after seed or early investor financing rounds, which is in effect what this is now. And I come to the board with over 30 years of international experience in strategy and governance, legal, government relations, and IT, digital and cybersecurity. So there's a level of experience both in being on the board of companies, being directors of companies, running companies, listing, IPO, etc., plus technology, plus certainly the case of Peter and myself, having reached a certain age where we think that the combined networks that we have and we've developed over a number of years can be leveraged to successfully identify potential targets from those sectors.
Networking and networks are very important. So what of the tight shareholder list that you've assembled? Is that a thing of beauty?
I have no clue. It's in the eye of the beholder. But I do think that putting together an experienced team in management and as shareholders who are willing to put their own money up it demonstrates how seriously the small group of investors takes this, because they've in the main put their own money on the line.
Typically, traditionally, it's tough for SPACs when it comes to talking and communicating with their investors. I'm just wondering how you intend to engage with the retail investors other than RNSs, because SPACs in particular are often accused of just being so silent.
You may come back to us in a few months' time and ask us to be a little less noisy. You never know. I understand that. I understand that the key to all of these things is communication, and it's important that is as transparent as possible. Obviously, there will be things happening that one can't talk about. I mean, clearly there'll be commercial and confidence discussions going on and so forth. But we are putting together with our investment relations advisors a full program to keep our investors and the wider market fully aware as we progress and we head out to do our job and to find a suitable target.
So what happens if you don't make an acquisition in the 2 years from IPO? Because it has happened to SPACs recently.
And you'll forgive me if I prefer not to consider that in too much detail. I mean, the rules are in place. There are rules. One way if one doesn't find and acquire a target within the right period of time, is that you liquidate and return what monies to investors, and you can actually get shareholder approval to extend and so on. So there are various different ways of dealing with it, but I'm not currently concerned about that. I'm concerned about getting out there and finding the right deal.
So then there's the blue sky thinking. So a bit of stream of consciousness here. What is the plan for value creation?
Well, so to answer that question, I need to sort of talk a little bit more about the sectors, because the sector, the value creation comes at least in part from the sector. So we think that we've chosen FinTech and Deep Tech for a number of reasons, but amongst those reasons is the fact that they're both of keen interest to investors, and investment in the UK in these particular sectors is rising. We think that now is a really opportune moment to get out there and to acquire a company at a favourable valuation that has high potential for growth. We've come out of 3 years of fairly unpleasant times, what with one thing and another, and a lot of companies, most companies, there are exceptions, but most companies have in essence simply been treading water or heading down. So there has been a tightening of available funding for many businesses in our target acquisition sectors, and that means that we think therefore there are businesses out there with significant growth potential that we can look at acquiring. That said, on the other side of the ledger, the trends and tailwinds in respect to the target sectors are positive. Global FinTech, for example, is expected to continue to grow. And I think that the current numbers are something like $1.5 trillion worth of industry by 2030. Deep tech is obviously smaller at the moment, but that's on a fairly significant path as well. Investment in just in artificial intelligence, which of course is only one part of deep tech, has increased from around 650 million pounds to something like 2 billion in the last 5 years. Now, whichever sector we end up acquiring something in, our strategy is focusing on the identification of companies that have the potential to provide a platform to scale and generate substantial cash flow. I mean, that's not rocket science. They need to be available at a realistic valuation, and we need to be able to unlock by putting money in and experience, unlock the intrinsic and any intrinsic and underutilized value. And in this sort of area especially, they'll need to have sound intellectual property protection or potential patents, or if they're further advanced, already have proprietary technology and their own intellectual property. But in a nutshell, that's kind of where we're at. As a SPAC, the way we grow is by acquiring existing organizations in the sector that we've chosen, and we think that this is in FinTech and Deep Tech. In this fast-changing environment, there's an abundance of opportunity.
So you've just revealed that you and one of your colleagues are of a certain age. Do you feel as though Ashington Innovations is re-energizing you and the team that's been assembled?
I would argue I probably didn't need re-energizing, and I certainly can't speak for our chairman. He's more than capable of speaking for himself. But I do think that a heady mixture of years of experience with agility and dynamism are sensible ways of putting boards together with the best chance of success. You need both think outside of the box thinking and an understanding of how these things are done to make it work. But the reason I mentioned age is because of networks. I mean, networks come over time, and there's a lot to be said for being able to pick up the phone to somebody that you've known for 40 years and say, "Hi, come and see this."
40 years, you don't look old enough. Chris Disspain, Non-Executive Director of Ashington Innovation. Thank you very much for joining us.
Thank you very much for having me.